Elon Musk's fortune was once tied to $250 billion in Tesla shares. But by 2026, he found a way to unlock hundreds of billions without ever selling a thing. A single merger vaulted his net worth overnight, raising one question Wall Street still can't answer. How do you get richer without cash? Here's where the story begins. In early 2023, Elon Musk's net worth hovered near $250 billion, anchored almost entirely in Tesla stock. Official filings showed he controlled about 172 million Tesla shares, worth over $150 billion at the time. But instead of selling, Musk used these shares as collateral for personal loans, a tactic that let him tap billions in liquidity while keeping his stake intact. In 2021, he secured a $2.5 billion margin loan against his Tesla holdings, pledging a portion of his shares to major banks like Morgan Stanley. The loan-to-value ratio was strict, typically around 20%, meaning for every $1 billion borrowed, $5 billion in stock had to be locked up. This approach gave Musk instant access to cash without triggering taxes or losing control of Tesla. The mechanics of this margin loan strategy would become the blueprint for even larger moves as his empire expanded. SpaceX's private valuation soared to $350 billion by late 2024, giving Musk a 42% stake worth nearly $150 billion. But the real windfall came in February 2026, when SpaceX absorbed xAI through a triangular merger. The combined entity was valued at $1.25 trillion, far more than the sum of its parts. That single transaction boosted Musk's equity by $250 billion on paper, thanks to the premium placed on AI space synergies. Instead of sitting on a static SpaceX stake, Musk now held a dynamic share in the world's first trillion-dollar private tech conglomerate. This wasn't just a headline number. The new structure allowed unpledged SpaceX shares to become powerful collateral for future funding, while the merger's scale opened doors to new financing options and liquidity events. What began as a private rocket company now formed the backbone of a financial engine capable of fueling Musk's next moves. By 2025, global spending on artificial intelligence infrastructure had reached 48% of all new capital expenditures in the tech sector. Governments responded with massive incentives, over $200 billion in green energy and AI subsidies, fueling a race to build the next wave of autonomous systems. At the same time, carbon pricing hit $150 per ton, turning emissions into a direct line item for every major company and creating new profit streams for those with clean tech solutions. These forces pushed valuations higher at a pace few had seen before. For anyone with a stake in AI, renewables, or carbon capture, the rules of the game changed overnight. The combination of public money, regulatory tailwinds, and runaway demand for compute power meant that even well-established companies could see their value double or triple in a matter of months. Timing, not just innovation, became the ultimate lever for outsized gains. Stock options fueled Musk's earliest fortunes, turning $350 million in grants into over $1.2 billion in realized gains by 2022, all without spending a dollar upfront. Token sales followed a similar pattern. In 2023, Starlink's pre-sale tokens raised $1 billion in advance revenue, letting Musk finance satellite launches before a single dish shipped. Government contracts played their part too. SpaceX's 2021 NASA Artemis Award delivered $2.5 billion in cash flow, front-loaded for milestones rather than expenses. Convertible notes like the $1.23 billion X refinancing in 2025 offered liquidity for spinouts without diluting control. Even a single tweet could spark a $14 billion surge in market cap, as seen with X's 2022 super app tease. Each tool, option, token, contract, note, or brand transformed reputation and vision into real capital, creating a funding waterfall that required almost no cash to start. By early 2026, the sum of Musk's wealth, without a single dollar in fresh capital, stood at $639 billion. This wasn't just a paper figure, it combined the full value of his equity in Tesla, the merged SpaceX xAI entity, and a cascade of unpledged shares ready for leverage. The number reflected more than market prices. It captured the effect of every margin loan, every government contract, every token sale, and every surge triggered by a viral announcement. Each layer stacked on the next, multiplying the impact of assets that never had to be sold. The $639 billion total represented the peak of cash-free wealth creation, blending real stakes, projected uplifts, and the power to unlock liquidity at will and never drawing down a bank account. Sharp gains like these come with heavy risks. A 30% correction in tech stocks can erase hundreds of billions in collateral value overnight. Margin loans, often capped at 20 to 25% of pledged shares, leave little room for error. If prices fall, lenders demand more collateral or force sales. In 2022, a 25% drop in Tesla triggered margin calls across Wall Street, forcing even the most confident holders to liquidate. Meanwhile, draft regulations from the SEC and Europe's MiCA threaten to clamp down on token sales and cross-entity financing, adding new layers of uncertainty. Navigating this landscape demands more than optimism. Musk's approach blends relentless risk tolerance, a vision and first mindset that prizes long-term utility over short-term gain, and the agility to lobby or pivot as rules change. These traits are as essential as any financial tool in the playbook. Today, wealth is built on influence, timing, and leverage, not cash. As AI and equity reshape markets, fortunes shift in silence. The next billionaire may never need a dollar in hand.